So one thing we talked about into this week was we could see things looking good from an earnings perspective, but we're still looking at some things that are creating tension for us. Number one, you've got the Iran war. Things are picking up with the tension once again, and even with Taiwan Semiconductor coming in today with big earnings. I mean, they disappoint as the stock slides down. Retail sales are not terrible; they're a little bit down, but U.S. and Iran tensions this morning really affect overall markets. So markets are plunging this morning. It's again going to be the Middle East tensions. So you could look at major sell downs, but it's just been consistently bleeding. So we talked about this yesterday. Part of the reason that we weren't entering any short-term trades was because of the patience that we're going to have, because we're waiting for some confirmation. Now, once again, we saw really big green for a moment there at market open yesterday, and we didn't enter because we're saying, hey, let's just be a little more patient. APLD seeing that sell down, they were kind of starting to actually look like they were green. This was yesterday at market open, starting to look green, and then once again, kind of just bleeding down a little bit. So not fully bearish over the last 3 days, but definitely sideways. You had some green, and then basically today balances it out. We see things flat across the data center market over the last 2 or 3 days. So this bleed is pretty substantial, right? Where a couple things to watch when we're looking back here from June and we're looking into July. A lot of these companies starting to enter territory that's very attractive, as they're just right down and around their 200-day moving average, which is good. But the bleed isn't stopping, right? So we're looking at the trend. There's no reversal yet. So how do we know when things are reversing? We need to see about a 10 to 15% jump cumulatively across the data center markets, and then we'll start to see them get into bullish territory. So currently they're in correction territory, literally 20%. So just keep it in mind that is, even though you can have good earnings, we've had really good earnings in Goldman Sachs and in Chase and Bank of America and all the top financial institutions. But yeah, we see everything kind of selling down. The only thing that might be green today, let's take a look at oil real quick. How is oil today? Yeah, it's a little mixed. Oil U is up, Chevron is up, Shell is up, and then British Petroleum a little bit negative, just about 0.25%. But for the most part, oil doing pretty good. And so that's what you're seeing with the effects, is that you can have good earnings, but with the Iran war tensions, we're seeing a little bit more red. So does it mean we entered some trades? We got some big sell downs. These are usually where the opportunities are at. You can see opportunities with APLX selling down 7% here. And the answer for me is still, for bullish trades, just waiting. Look for recovery and then potentially entering in, as we're still waiting for that confirmation. So we could buy right now and then just wait for a quick recovery snapback, but we're just on short-term trades waiting for confirmation. Still holding all my positions, very patient and totally fine with the pullbacks. Some of them have pulled back 10, 20, 25%, but the long term, just continue to hold. Nothing to really worry about at all. Seen this a million times, and we're most likely going to see large recoveries. At least during this term here for Trump, I don't think you're going to see things just sell off. We're going to see really ahead of this. You had Trump as well saying, we're going to see sell-offs. We're going to see sell-offs. And I don't like to just say, oh, that's what the president said, but it's kind of crazy. It's like he's literally dictating a large portion of the markets. And while you don't want to pay attention to all those little things, or those just watching headlines, don't really want to do that too much. That's kind of been the case when it comes to the markets. Hey, we're going to see a pullback. And everybody that has been making a lot of money in the stock market, things are maybe going to be a little choppy, and kind of just hearing exactly what's playing out, and then it actually plays out. And so currently, again, we're just watching, going to be patient. We could see maybe recovery on these data center stocks this morning, but I would rather, I like the red, it's good, but I would rather just wait for more confirmation. So that's going to be kind of the main goal for today, is we're just going to essentially be patient, have a little more monitoring and focus and analysis on these, but that's what you see. So photonics market, same deal. Again, we're seeing some of that red kick in. SanDisk was down. Of course, SK Hynix plunging, even Taiwan Semi plunging. But there's been some good reports. They weren't necessarily really bad financial reports at all. Again, we had really good earnings with Goldman Sachs and a lot of the financial institutions. But right now, we're just looking at sector selection. Right? We're seeing a lot of major institutions and investors basically sell off and take profits on a lot of these markets. And then we may see energy stocks start to pick up first. Again, oil prices are going to be, oil prices are going to be making a recovery as they have the last few days. So oil is kind of doing good. So maybe if there was a trade to be watching on, at least in my eyes, maybe we do kind of look at that oil U trend. We've seen a very consistent trend there. It's possible that actually it's not too bad to play. About a 5% margin for profit in the short term, kind of continuation of 5 to 7 margin for profit in oil U. But yeah, look at that. Yeah, and this is especially going to be key for those 2x plays. Just having patience doesn't necessarily mean not preserving capital. I see a comment there from Dean. Dean's like AOX is down 35% from yesterday. Yeah, I mean if you look at Photonics, they're getting these 3 and 4% sell downs, or even let's say a 10 or 20, 15% sell down. That's pretty hard to stomach if you're looking at a 2x that's actually down 7% or 8%, or if it's down 10%, 15, potentially 30% or more, seeing corrections on the 2x. So it's super important to look at managing risk immediately on a lot of those, and then if you get in a position where you are maybe holding them, again, evaluating capital preservation. It's the number one thing that we talk about, and it's the number one thing that beginners overlook. Is really the best thing to do is just to focus on sometimes not losing money in trading. That's why we're like, hey, it's okay not to take a trade every single day. And when the opportunities and trends look really good, this is a trend in oil. Oil's looking more bullish, things are looking good. But if you look at semiconductors, what does it look like? Well, oftentimes we're seeing this kind of downtrend. You'd like to see maybe a continuation or a bounce on Micron, right? As they're down here, and it's possible you get that bounce around 850. But no one, you can't go against the market when you see this trend, this downtrend. What's one of the top things you'll hear from a lot of investors or traders, at least traders, oftentimes that have success say, don't go heavy against the currents as a trader. Maybe as an investor, buy when there's blood in the streets. When things are down, it's good. But as a trader, sometimes moves can play out longer, and stocks have a greater chance of continuing in the direction that they're going than reversing. That's really key. So right now, with things kind of going in this direction, we see this correction with Micron, for example. There's a greater chance that it continues right now down than there is reversing. Okay. So there's something to consider. Now, not necessarily bad though. Like I said, it does. Like I'd love to say, hey, Will's here, I'm bullish, and we go back to being bullish on a lot of companies, but that's just the reality of what we're seeing. Yeah, just the reality. All right, we got Joey here. Good morning, and Tyler. I hope you guys have a great day here. Idris, it is Thursday. We're jumping in. Marcin, good morning. We got John here. Good morning. Sonal, good morning. Elmawin, what's going on here? Good morning. Hope they're having a good one. Joey says, do you think Rocket Lab or ASTS are at a great price right now for medium term? I think ASTS is going to see even more volatility. I would imagine they're selling down more than other companies, but let's take a look. They are. Wow. So ASTS, why would it sell off drastically more than other space tech companies? Anybody know why that is? Anybody? It's because of their multiple. It's because they are don't see a lot of revenue. And so what becomes more and more important to that keeps a company from selling off drastically during a time of corrections in the market? It's going to be that their financials supports their price, basically. Like a company that might not sell off massively today, actually, it could be NVIDIA. Look at that. NVIDIA is the only company that's not down more than 2.5% in the semiconductor market. Why is that? Well, their valuation actually is not bad. Number one. Number two, they also haven't seen a huge rocket up when other companies were, and people like to move into companies that are a little more solid, a little more fundamentally sound and secure when markets correct, than being companies that are slightly more speculative or slightly less certain. So that just goes to show, specifically for what is it, ASTS here. Gotta log in real quick on Prophecy. It just goes to show for ASTS that exact thing, right? Certain companies of photonics like GLW is going to be doing good. Even we'll see corrections in AAOI, but they have pretty good financials. You might see corrections in Coherent, but they have pretty good financials where they might stabilize. But ASTS, for example, they've got this $30 billion market cap, just a huge market cap. But they lost $191 million last quarter. $191 million they lost. They're only doing about $14 million per quarter. That's nothing in comparison to their market cap, $29 billion. Right? Thousands of times their current revenue is their market cap. And so there's other companies where their revenue is actually like the last quarter or two is greater than their current market cap. Those companies are going to be doing fine when the market corrects. They're not going to have as much volatility. But a company like ASTS, if I'm looking at it right now and I'm seeing markets correct, I'm saying, I definitely don't want to be in this company right now. That's exactly why you're seeing it sell off way more than others as the space tech market corrects. So that's why. But overall, things looking really good as far as opportunities starting to shape up. As soon as we get things moving slightly bullish, let's say in the market, it's been a historic kind of sell-off here. But how low can it go? I think it comes down to understanding, this is always kind of a rubber band effect, especially in a lot of these top markets, like the essential markets. You look at energy markets, looking at, for example, airlines. Airlines are probably going to rock the world. The World Cup, all the travel, massive amount of travel. Finance companies. I mean, we saw a lot of great earnings happening in the last week. And then on top of that, you've got Woodstock. I mean, they're going to be making record revenues into their next earnings after all of the, kind of similar to their prediction markets. They made a ton of money around the elections. I know their prediction markets have been doing amazing with the World Cup as well. Those types of major events. So there's going to be a lot of windfalls for a lot of these companies. Defense contracts usually do well, and we're going to see more spending, especially amid a war. And then, of course, oil is doing well. But there's just, you're going to see those markets that people are taking a step back on right now. Semiconductors, AI, robotics, and every market really still. But there's going to be markets that are taking a breather. Just keeping that in mind. Okay. Annette says, hey, everything's good on my end. Thanks, Annette. Appreciate you. What would be a good entry for ASTS, in my opinion? I don't think that there's any per se, great entry unless your time horizon is greater than 3 years or 5 years. If your time, and then in that case, you're probably dollar cost averaging, where you're kind of buying a little bit, because they're again just pricing in. I'll just kind of tell you a little story. When I started investing in ASTS, they were at $3 a share. They've gone up well over 10,000. No, 1,000% they've gone up. And their current market cap is thousands of times the revenue. And so I would look for, I've always said, ASTS is an amazing mission. They're going to be a company that is going to be great, I think. But as far as what we saw here with this $135 a share, it's nothing other than the markets seeing that greatness and buying into it, and it surging to levels that it's not supposed to be at for many years. And so these pullbacks are expected, very normal. I wouldn't be surprised if we get back into these ranges between this 20 to 30 or maybe $20 or $40 range. So anything medium to short term, probably not looking like any entries I would really personally look at for ASTS right now. Start to see the momentum shift or something like that, it can make a lot of sense. And again, 2 to 3 years plus, I think you can't really go wrong with ASTS. But that's quite the time horizon for anybody that maybe was originally looking for a day trade, or someone that's just looking to make quick capital. There's probably a lot better opportunities. So, Jason, no video on, no sound. What's the problem? Should be working. Should be working, Jason. Let's see. It should be good to go, Jason. Maybe refresh or check on another device. Okay. So that's the general consensus in the market, guys. Patience is going to be the key here. Not going to really go really heavy this morning. And there's nothing wrong with a lot of these companies. Taiwan Semiconductor didn't have bad earnings. We actually see earnings pretty great. They're the company that's down the least, right? You look over here, down 2.18%. Coherent's down 4%. Marble down 5.7%. And that's asking about Marble. Marble is way more favorable than, for example, ASTS. They could snap back to $300 a share much quicker because their photonics is just absolutely, it's a totally different play than ASTS. If you look at MRVL, generally speaking, they got positive net income. Their revenue's already doing $2 billion a quarter. That's a quarter. They've had positive net incomes of billions of dollars annually. They're doing over 10 billion now, nearly annually. So balance sheet is good. 18 billion in equity, 26 billion in assets, which is well over 10% of their current market cap. They're a different play than, for example, ASTS. They're in the same conversation as some other top tech companies. They're looking similar to that of like an AMD. They're seeing strong demand, strong financials and revenue. If anything, they're just selling off with a greater market right now. Not terrible valuations for them. They could sell down. They could see those levels revisited around 150 or even down to 200-day moving average would be around 135. But ultimately, that $300 a share based on their current financials, they'll most likely revisit. Yeah, and so again, really good earnings, like Joey says. APLD will probably really have great earnings. Just watch out. The near-term stock market momentum is what, even with great earnings, we can see some sell-offs. So keeping that in mind. Okay, cool. Here we go, guys. So, I started to read Kevin's message. He said something about the link, but I think something that there's some moderation or something. I don't know if it was a profanity or something like that. But link not working with link working. I tested it, tried it on my phone, and then tried it on my desktop this morning, and it worked. So, what gives? What gives, huh? Some people say it's working. I'm gonna click through on the email on my own self. So this is my email this morning. This is the link. We're live. It's titled. Sent at 6:15 a.m. this morning, 6:16. TSMC beats overnight. Net income, positive revenue. But Iran strikes escalate. Things are seeing big sell-offs. We click into the link here. See what happens when I click on the link. Boom. All right. It worked for me right in front of everybody there. So worked on my other device too. So. Okay, Dean says on an iPad, it's going to redirect you, and then you open an app. Yeah, maybe I could try another device. What are we seeing? It's working for Halloween. I mean, obviously, if you're here, it's working for you. I just showed you guys it worked fine for me, so you'll notice that worked. But if you're here and you're like, we use tokens, right, on this. But I'll drop an extra link for those of you guys who are in the chat. If you use this link too, because you can do the email link, or if you use this link with your stock link there, or with your stock link, then it will work for you. Oh, Adrian said I had to add a slash at the end. That's kind of interesting. What's going on there? Slash. Does that make things better? It does have a redirect, but both work for me, so I'm not really sure what's going on there. But hopefully we continue to resolve that, make it even bigger. We can take a look at the link again today and to spice up. Obviously, too, some people may be having trouble with the link. But again, I just tested right in front of everybody right here with the email. First thing, verify you get the email. It's titled We're Live. It's sent from my email. You get it every morning. You click through. It should take you straight to the right there. Okay. So, that's a breakdown. So, increasing your rate of learning during this time is going to be key. When the market pulls back, the greatest force that you're going to have to evolve and grow your portfolio. The outside force here is going to be a difficult one to control, but the principles that are going to serve you best right now, transparently, for me, I've always seen the greatest returns after a downswing like this, where you're also learning and finding best opportunities. So once again, what did we learn about some of these companies this morning? A lot of them have good financials, things are looking good, but greater market sell-off due to the increased Iran war. So a lot of these companies are pretty good. We're seeing good momentum. It's just, or good momentum under the hood, but on the technicals and on what we're seeing from institutions, kind of similar to what we saw last year after this time. We saw the markets kind of slow down. Kevin says, you tap open to do so on YouTube, and then you get a black screen, no picture or sound. Oh, okay. To see the chart and hear you. I can get there, but no ability to comment. So I toggle back and forth, and I'm behind. Oh, okay. All right. Maybe we'll have to do a deep link of some sort. I'll double check it again. Appreciate your patience. Thanks so much for tuning in. I'm glad you at least made it here. Once again, that's going to be the game plan for today, is patiently waiting for more confirmation of the reversal. A lot of them holding below the moving averages. Once we get above moving averages,